we had thought that all the sales related to the blow-up of Archegos, of course, the family office, had been completed. And we all know already the losses that have been taken by prime brokers, led by Credit Suisse at, some $4.7 billion, Nomura at $2 billion. What was something of a surprise, and frankly, as my understanding, was a surprise to Discovery as well, which I think believed that all the sales of its stock had been completed also, was that late today, after close, it was made clear that CS had 22 million more Discovery K shares and 19 of the A shares to sell. So it's a pretty sizable amount. I mean, well over $1 billion, $1.4 billion worth of stock, something like that. And again, something of a surprise. Given there had been an expectation that everything had already been liquidated, the losses had been already taken by CS. So some things unclear here in terms of whether this will in some way add to the loss or whether this is already incorporated in their estimates of what they would lose. But again, shows that the reverberations from the blowup of that family office and the bizarre behavior of Mr. Hwang, who ran that firm, given how large his stakes were in both Viacom and Discovery and other stocks, it's not yet over. Perhaps it is now. That is the expectation, at least when it comes to Discovery. But that's what we've got, at least in terms of late in the day trading here.
I mean, I think from the shareholder perspective, David, the problem is the word perhaps. It's done because when Credit Suisse announced that loss, there was a belief that they accounted for all the losses. And then, Credit Suisse, April 5th, comes out and sells blocks of Vipshop, Farfetch, as well as Viacom, and now Discovery. Right. And so the shoes just seem to keep dropping at this point.
Yeah, your point's good. When they did announce those big sales, remember the 34 million Viacom, we all assumed, okay, that's it. That's cleaning up everything that's left. They had been waiting, and mistakenly so, of course, hoping perhaps there would be a bounce in the stock that they would be able to benefit from. That did not take place. But given that Discovery was not part of that sale, and by the way, there's another company as well that's been sold today. IQ is the symbol. I'm not that familiar with it. You guys may know it far better than I do. That also is being sold as part of, again, cleaning up what's ever left, we expect. Now, I think at this point there is an expectation they're done. But to your point, Melissa, I guess, given how opaque everything has been involving this situation, you can't be 100% certain.
You got to wonder, who's the buyer on this side? I mean, if Credit Suisse comes calling and says, we've got blocks of shares, who's saying, yeah, hand them over here because we do believe that this is the end of it.
Right. I mean, and listen, now I would note that the relative performance of Discovery versus Viacom, both of which have been up at one point, over 100% for the year. Viacom, at my last look, was up something like 6-7% for the year. Discovery had been up as much as 34%. So it did not suffer as much as Viacom in this violent sell-off as a result of the liquidation of what was at least a $10 billion fund, as we know, on leverage. He owned, that's still to be told, but the percentage ownership that he had of these companies was truly remarkable. And we're still learning. And so that's kind of where things stand right now.
All right, David, we appreciate you calling in. David Faber on the Newsline for us tonight. IQ, by the way, is iQIYI, a Chinese company. Tim, and certainly we've seen selling pressure. Yep. We had mentioned Vipshop, but also IQ. We've seen some pressure on Tencent Music in the past. What do you make of all of this?
I think they're the same chart. If you look, Discovery's chart, this may be, David's breaking some news here and always doing a great job and pointing out, most people know Discovery, most people know Viacom. They look at those charts very, very similar. In fact, making new lows today when, in fact, we thought a lot of the worst of this was had taken place and gone through the market a week, maybe 2 weeks ago. But the same thing with Tencent Music. I'm still a shareholder in Tencent Music. In fact, looking to nibble and add because fundamentally nothing has changed here with this story. IQ is, call them a YouTube, social media, online streaming, entertainment services of China. Again, same story. And the volatility in some of these names that are less liquid, it's easier to push these stocks around. But I think they're all the same chart.
Yeah. If you were a shareholder of Credit Suisse, Jeff Mills, what questions would you be asking tonight?
Well, it's pretty clear that you want to know where things stand in terms of the liquidation. And I don't know what answers you're going to get. Quite frankly, I've been surprised at how well European banks in general have held up during all of this. If you look at credit default swaps, for example, not a great deal of strain there. So I think that's interesting and telling perhaps for the entire macro environment. But relative to the two stocks, I think I talked about this maybe when the news first broke, but we were sellers of Viacom at 55 on the way up. I think whether you're talking about Viacom or Discovery at 24, 25 times forward, they're both too expensive. I do think they look a little bit more interesting now at current valuations. Viacom perhaps more so, given it's just at its 200-day support. It looks to be holding there. Perhaps more to go in Discovery.
And Viacom raised money, so it's a different story than it was before with just a turn lower guy. And all this, of course, happening on the eve of bank earnings. And you got to think that Archegos is going to be a topic on those conference calls.
That should be the first question that's asked. Forget about earnings. Earnings going to be great. I think if you heard what Credit Suisse said last week, what a $4.7 billion loss, but they only expect to lose. And my numbers might be off a little bit, so please don't at me. But $1.5 billion all in. So that suggests they had a remarkable quarter, but for this. But the story, and I don't think we're suggesting stories these underlying stocks. The story is Credit Suisse, and they made a trading decision. David Faber alluded to it. They didn't just discover, no pun intended, they had 22 million shares or 19 million shares of Discovery Aid lying around. They made the decision, the market's going to bounce and we're going to artfully get out of this. When that wasn't the case, they had to make a decision to do this. So it's more about, the decision making at Credit Suisse, in my opinion, than it is about any of these individual names.
Yeah, or the prowess of a Morgan Stanley, which managed to dump its exposure prior to all of the stocks going down. Grasso, what's your take on all of this?
Well, to Guy's point, it really is that inside the huddle chat where when you work in an upstairs bank or when you work in one of these brokerage houses, when you see something sell off 50 or 60%, you're always thinking it's going to bounce, and you're always trying to play trader, especially the fact when you have the losses that are on the table. But a Morgan Stanley who was ahead of the curve, it demands the questions all the way around. And I know we're all tired of saying that statement. What did you know? When did you know it? So for individuals who are trading, it's a trading show. I've been asked a bunch of times over the last handful of days, when do you step in a Viacom or Discovery? And when you see things off this dramatically, you want to step in. And I think we're very close to that level. But obviously with the news today, it makes everyone scratch their head. But we're not looking at losses of 40 or 50 from here. So I think you're safe to kind of dip your toe again on the buy side.
Shepard Smith here. Thanks for watching CNBC on YouTube.